Hey guys, this is Patrick and you are trading with Prime. I'm going to have to keep it down. I've got a 3-year-old who will wake up. Anyway, I'm going to run through this really quick with you. I'm going to try to get this done as soon as possible. To me, we keep talking about this. We're above this rising trend line. And as long as we're above this trend line, I've always said you can't short the market. However, we're coming into that zone where we can start choosing places to short this market. From where I sit right now, we might as well go test the highs. The high is 339.08. That's what it looks like they are trying to do. And so just looking at the chart though, I want to just go over with you guys really quick. You know, I wanted to put this video out later in the week or even early next week, but I may not have the opportunity to. So I want you guys to see what we're looking at here. And so for me, just looking at this chart to go over with you how I would short it is a scenario like this, and you have to kind of keep this in mind. There's several ways to play this out. If you were looking for a longer term short position, you could take this on the daily chart. If you're looking for a multi-month short position, you could take a look at the weekly chart. And honestly, let's take a look back here because there's something I really want to show you guys. If we go back to, if we look at the weekly chart, it doesn't really give it away, but let's go ahead and look at the monthly chart. And the reason why is because I want you to see what a reversal candle looks like. And, and just, I'm going to zoom in right here. And this is the monthly chart. So again, it's really hard to trade off of this. You would have to have a lot of patience, but here's what we saw, at the beginning of the year. In January, we did see that we had a reversal candle, which is this candle here. So trading on a multi-month time frame or multi-week time frame, keep in mind, if you want to be really, not as aggressive and you want to be more conservative in this trade, wait for the reversal candle. And then you saw in February, it retraced even above the high of the reversal candle, right? But then it came back down and it closed the month well below the low of the actual reversal candle. So we could be looking at something like that. A scenario like that would be, imagine this for a minute on the daily chart, and this is why we have to use all time frames. If I go back to the daily chart, right, that scenario could play out where, let me zoom in here. That scenario could really play out where you'll see a tick up, a tick up, a tick up, a tick up. We could even take out the highs, right? But if your stop loss is at this level, 339.08, you would be looking for a daily or a weekly close above your stop loss if we're trading on the daily time frame, if that makes sense, right? So even again, we could wait for the actual reversal to happen, and a reversal candle looks like this. I'm going to do another video soon to really go over this in more detail, but just to play the scenarios out, here's what I'm thinking. And this is what happened last year or the beginning of the year before we saw the dump. We were kind of expecting the dump, but not to the magnitude. The coronavirus is really what got this thing picked up and heavier steam to the downside. Keep this in mind though. There's several ways this could play out. We could pull back a little bit and then we could go back and challenge these highs, right? That's one way of looking at it. That's one possibility. Another possibility is we could just go straight there. For all you day traders out there, this is something to keep an eye on too. For all you day traders, know this. If I'm looking at this price level, I know 339.08 is the actual high. I'm telling you this right now. If we get up there in the next, let's say tomorrow or Monday, next tomorrow or Monday, if we start getting really extended up in this price level for day trader, that is an optimal level to take a short trade. But here's where I'm thinking. I'm thinking if we even get up that high in the next few days, they're not going to stop at the all-time highs. They're going to start making it look like they're going to stay above the all-time highs. They're going to suck in as many traders as possible. Every mom and dad and brother and sister and family dog is going to be out there buying calls at these price levels, right? And that's exactly what we saw in the beginning of the year, end of December into the beginning of the year. Let me go back to this. Let me go back over here. So something we looked at is, see how the market pulled back here, came back up to test this former high, and it pulled back and it made it look like it was almost not going to even try to get above there. But guess what happened? It broke out and then traded sideways and then broke out again. This psychological period of time sucked in a lot of traders. even on this bar, even down here, people were buying. People were buying this drop off right here because they thought it would bounce off the support, and it didn't. So keep that in mind. There's so many possibilities. But my viewpoint is this, is that if we get to that price level where we are challenging the all-time highs, I don't think they're going to stop there. I think they're going to try to pull in as many people as possible, okay? But again, we could trade sideways for a few days and then get up there. Now, if we do trade sideways and get up there, this short trade is off the table for me. There's no point in trying to short trade that when they have consolidated just underneath of it. To me, that's a clear signal that they're going to keep going up, even on a day trade. You know, we do have a lot of resistance in between now and the all-time high. We have resistance at 335.50, call it. And we also have resistance at 337.74. So there's still a little bit of room in here. Even at 325.85, there's some resistance. So keep that in mind. And then let's go into the vehicles of actually, you know, we're going to go through an options course. By the way, if you guys check us out in Discord, I left the, there's going to be a link in the description. We're also here Sundays, 5 p.m. Pacific Standard Time. So be sure, and if you're getting value out of these, be sure and hit the like button and then subscribe, and then hit the bell notification so that way when we do go live, you won't miss it. We're doing an options course coming up here. Let's see here, in 2 weeks on the 16th. So really quick here, a vehicle that you guys could try is go into the S&P 500. Whoops, go into the S&P 500, go ahead and scroll down to, I don't know, November, December, January, October. Give yourself a little bit of time. Start scrolling through these contracts, and I'm really not trying to confuse anybody. I've got it set on all right now. You know, start going through these contracts. They can start getting, see how they start getting really expensive. And this is only a 300. I mean, they start getting really expensive here. But something I want you guys to focus on is really pay attention to this price over here. This is theta, time decay. Really pay attention to that. Also, this is delta, which is the number of points that if a stock moves, you know, the S&P 500 moves $1, this is the dollar amount that you would be receiving or losing per contract. So keep in mind that you do want to find a good option. You don't want extremely high delta. There's so many different ways, whether you're hedging or whether you are going for making a lot of money. I'm not going to get into spreads. Another idea that I had for you guys is pick another right here. I picked IWM. Go into another one and check out its prices. So here's the IWM chart. Whoops. Here's the IWM chart. So keep this in mind too. We did see a little bit of relative weakness, but it's just because we're at resistance right now. I do believe that the S&P 500 finds itself up above at the old highs. The IWM will also be tracking higher. But there is relative weakness in the IWM and also the financials. Keep that in mind. Anyway, this is IWM. So right now we're sitting at around $153.70. And so keep this in mind is you can go into the options for this one. If you want to short the S&P 500, believe this, if the S&P 500 is going to go down, the IWM is going to go down as well. So keep that in mind. Let's see here. These are 18th of December 2020 contracts. So you can see, even if I picked at the money or near the money is 153, even if I came in here and chose something down, I got a little bit cheaper. Let's say I chose a 140. That's not out of the realm of possibilities. I'm just throwing this figure up here. I haven't actually done the research. Look, theta, way less than the S&P 500. Delta, yes, again, a little bit less than the S&P 500, but you're not spending a lot of money. You know, you're going to spend $600 per contract. So there's possibilities that you can, you know, if you want to do a spread to get a better price, but really start focusing on, you know, what you're spending in the time each day of decay. That's very important. Now, those are the two options as far as shorting it. Now, here's the thing. You could be early. You could start the short position now. The only problem with that is that you could be wrong in the trade for quite some time before you're actually right. Maybe you even get stopped out. So it depends on if you want to be aggressive. If you want to be aggressive, go ahead and you know, you could start it really at any point, but just keep in mind there hasn't been a daily reversal yet. You know, we'll see what tomorrow brings. Right now, let's look at the weekly chart. Right now, the weekly chart, and I hope I'm not going too fast for you guys, but I really wanted to nail this down. Even looking at the weekly chart, This is very bullish. There's nothing on this chart that says, hey, short me. You know, the Fed is pouring money into the market. Central banks around the world are buying up this market. They're buying our debt. They're buying bonds. You know, they're buying gold and silver. Everything is rallying right now. I would not be surprised to see some sort of parabolic move. So just kind of keep that in mind. We'll see where we close tomorrow. I mean, a black swan event could come out tonight, and you know, next thing you know, tomorrow we're trading it down at 325 or something like that. You know, you never know in this market. One thing I do know is this: when the buyers run out, when people stop buying this market, the move to the downside is going to be insane. You're going to see a candle that looks like this. That's how many buyers are flooded in here. Also note the relative weakness as far as the volume goes, you know, which can continue, you know, continue going down as the market goes up. It's just something to note is that there's less and less buyers. That's also a, you know, kind of interesting thing to look at. But yeah, I just wanted to go over with you guys what, you know, what the possibilities were. Again, we could trade sideways, we could rocket up. And again, for you day traders, if we are going to rocket up, the faster that we can get to this price level, 339.08, the more likely it is that there's going to be some sort of pullback there, intraday at least. It doesn't mean take a swing trade. Again, and if you want to be conservative, wait for the actual reversal candle. You know, anyway, check us out on Sundays. Again, link to the Discord is in the description below. If you have any questions, comment on the video below and I will get back to you guys. And go ahead and like the video and subscribe if you want to be a part of upcoming videos. All right, thank you guys.